Hey guys, DJ from PTA. Want to go over this week's trades. I'm gonna do like a weekly recap this week because I didn't really trade this week. Most of the people in the Discord did. They caught a couple of these plays, and I wanted to kind of go over. A few people asked me to go over some of these. The one I'm not gonna go over is QNGY. I went over that in the previous video, so you can go back to the library and check it out. As always, I try to go over the SPY, kind of get a consensus of what's been going on in the market. As I talked about in the previous video, you can go back to that October 20th video where we talked about this critical area here and the push that we were looking for above 396. And it will be a go at that point. Again, got to get it over here, still trading under the 200. So we're still in a bearish territory when it comes to the SPY. All right, so the first trade I'm gonna go over, which was on October 25th. So I'm gonna go to the on-demand features. One is really cool features that we have dealing with Thinkorswim, so that you can actually kind of go over a trade and pinpoint areas. I'm doing it for the sake of so you can see the actual chart. So doing AMV was that ticker, AMV was the ticker. Again, it was one of those type of trades that like it just, you know, it's one of those pop and pull moves. So when we break this trade down, you only really had one little solid opportunity, and that was this right here. So let me go back here, go down to the 5. This is one of those trades that you had to wait for. So it created the A, it pulled back, and it popped. So this became sort of like an A, B, and then this was the C area. So you had to really zero down on the 1 minute to really see it, and it was right there. So when I look at trades, I'm looking for that area, the key area, whatnot. So you had this pullback, and then you had this nice, you know, area here. So let me do this. Right here, and this is kind of like the area right there. So, you know, when you seen this bounce, we had some support. It bounced up and pulled back. Your area entry would have been approximately right here. So this was a good trade from here. He had a low risk, and it popped into the 1937s. I have traders said they got in at 1801, which was right here. Had this big swash, and then it ripped higher to 19. So it wasn't the prettiest trade. But again, you have to pick the opportunities when you see them. That was one in particular that some traders wanted me to go over. All right, so going back out to the daily, next trade we're going to go over is EDU, and that was for the 26th. So let's go to the 26th. So on the 26th, this was a pretty solid trade. I'm looking at this, something I didn't play, but we had a nice little pop up off of the daily. Let's break this down into a 30-minute, and you can see here that we had a little bit of light price action, about 195,000 in volume and price action. So when you see light volume in a day, you got to let the trade unfold. So we had this nice little range, opening bar range, first thing in the morning off the 30-minute, and then ultimately you have to wait for your pullback. It has to be a significant pullback, ideally. This one here, it worked out to be a little bit different than most trades, but this will probably have been your A, your B, and then it took out this area but not over the high. So what I like to see typically when I'm in the trade or when I'm placing a trade, I like to see the trade kind of manifest. So when I seen these higher highs on the 15, I probably wouldn't have played it. I would have played it off of this area here. So this would have marked my area here, and then pulling off of that area was right here. So you definitely got to let it pull down, but it was already respecting the zone, which was here. So when it pulled back, any of these entries here would have been great. So I would have just waited for it to kind of manifest. And let me show you how that looks on a smaller time frame. So you can see that it pulled back into this area, and then it kind of just slowly grind up. And as soon as it got over the key area, it just ramped up and went to 27. So it wasn't the cleanest trade, but it was definitely something you could have took little small bites in the trade and loaded into the trading until it took off. So with very low risk. So ideally, the entry probably would have been somewhere here. But again, it's just really based on preference. You would have had probably about 20-cent risk off of that, and then it was a nice rip and play. We're taking out the daily high, and it kept going from there. So you're looking at about, right here is about where it took off at. So a little bit above high, about $26 or so. Would have been a decent entry. And again, it's just how you read the chart. You have to wait for it to manifest. You can't just jump into the trade because it's going up or because you think it's going to go up. The next trade I wanted to go over is EPIX. EPIX was a very, very strong stock out the gate. I like to see when the bars are completely green like this. Now, we had to play it safe because you can see it ran straight into the 200 EMA. But when it comes to these type of trades, you have to play it based off price action. So ultimately, you have to either be going with the momentum, and I usually like to see that first 30 minutes pushed out, pulling it back. We can go down into the 5 minute. Let me go to the 15. And you can see an entry right here. So basically, I would have been looking at this from this area here once it made its higher lows off of the 5 minute. So right here was the key area. So let's discuss that. Go back to the 15. Remember, this is your key area. So I'm going to draw you a line here. Let's go here. Remember, this is entry day, so it's going to be purple. So this stock actually gave you a couple entries. And then right off of here as well. So what I always do is, ideally you wouldn't have been able to see the first one. The second one, so you would have took off of the first one. We had a big push with a bunch of volume. You break it down into a 5 minute, you can see that this was a nice little pullback, and then going down to the 1 minute is when you would have found your entry. Now this is where you have to be on point to really pay attention to what the price action was telling you. So right there is where your first entry would have went in, right about there. So we got this pull back into this area, and then it popped. As you can see, it did the same thing again. It pulled down, used this area as support, about that 320 area. So your entry would have been here, about that 320 area, and then it popped, and then right here is probably where most people got interested in it, right here, when it got kind of choppy. So you had two entries. Your first entry could have been here, and then your second entry would have been about right there, risking to here. So I like this entry better just because it's more of a pullback entry. This has been a nice little breakout above 6362, and then pretty much from there it was off for the races. And then it did give you a little bit of a trap here, but I probably wouldn't have played it here. So this was just your two areas of interest on EPIX. Remember, this is October 26th. So this is your key areas of getting in, looking at the chart. Now, ideally, this part here you wouldn't have been able to see. So your first entry would have been right here because this was a decent enough pullback with some consolidation. Next trade we're going to go over, I can't use the on-demand option, so we're going to just go right into the chart. That chart was View, VIEW. So what View did, which was very interesting, and we're talking about the 27th, so this is this day here. Again, stock's not really having any movement. It just goes into an area and then pull right back. That's just the climate that we're in when it comes to trading. So coming out that gate, it pulled back up, and then this was your first 30-minute range. So what happened that I saw on the trade, which was very interesting, was the initial pullback. So you had this initial pullback, and let's break this down to a 15. But you had this initial pullback right here off of the 5. So when you had that pullback, that's where most people got interested. So you had to really catch it, and it was off the 5. So this was your key area here. This is where it stepped up here, and then this would have been ideally your entry. Excuse me. This would have been ideally your entry. So ultimately, this area here is right where you probably would have been looking at getting the entry, risking off the bottom of here, off this support. So you had some consolidation, jumped in about right here. You're looking at about 5-7 cent risk, and then it went to 194, and then it just knifed itself. And that was the story of this one. So it's kind of like it was struggling to go up, and then it got knifed, and as you can see with the price action, it just kind of went dead for the rest of the 2 days. And that's View. Next stock that I'm gonna go over now was UAVS. UAVS is a previous runner. This is something that's been probably paid a multitude of times, multitude of situations. This is one of those penny stocks. I don't really play them that much, but when I'm doing my reviews, I'll definitely want to go over any type of play that would make sense for a new up and coming trader. So UAVS, this was a really interesting trade because it was a penny stock. So let's kind of break that down to the 30-minute. Go back to the 30-minute. As you can see, we had first 30-minute candle right here. So we had our opening price range OBR on this at 30 minutes, and then we had a takeout right here. So let's break this down to the 15, and then here's our pullback. So ultimately, when most people saw this pullback, remember that's entry day. Most people saw that pullback, and then they got interested. So we had a nice little 15-minute pullback, and from there, we started to gather up a position. So the interesting thing about this, it didn't really have a lot of volume. First volume was about 70,000. So you had to wait for the volume to really creep in, and it crept in about right here. So what most traders will do is wait for it to pop, and then they played it off of the top of the range, which was right here. So right here was a key area, right around 54, 53 cent. So I probably would have played it somewhere off of this 53 cent, risking to 52. So once it cleared it, I would have got in about 53, risking a cent. And then you had this nice pull out to 65. So ultimately, it's really price point. I mean, it wouldn't have been 53 exact. It might have been 53.01 or 53.12 or something like that. And then you just watch the price action unfold. So this was a nice move to the upside up to 65 cent. Real quiet. Didn't have a lot of volume to begin with, but it ended up paying out because it was doing exactly what we call placing the trade. It was actually in motion with the pattern and everything that we teach in our classes. So the next stock I'm gonna go over is a little bit higher price. Now this is rolling into October 28th. We're on October 28th now. So these trades are for today. because today is the 28th. But Apple was one that took off. I think it was just overall market sentiment that made this one stock move. I believe it was reaching for highs. It hit the 200-day moving average. So it was bound to get a pullback. Well, let's look at the first 30 minutes. We had the first 30-minute opening range, and then it held back with a little bit of a pullback. So we look at the 5-minute to see where that pullback happened. It probably happened somewhere around here. So let's look at the 15. And what happened is you now have your pullback. That's what you saw on the 30-minute, was that pullback. That wick was the pullback portion of it. So let me go back, edit this. We're gonna do this purple. Now if I go back here to the 30-minute, you can see that was the high. That piece here was that 15-minute pullback. So we'll go back to the 15-minute, and you can see this is that 15-minute pullback, a part of that 30-minute trend. So now when you go break down to a 5-minute, you start to see the actual bars or the pullback in action. So that's that 1, 2, 3 bar play of it pulling back into a support. So it found some support at 150. 150.50. So ideally, if we break this down to a 1-minute, this is where the entry got interesting for you if you were playing this, because right there is where your entry would have stepped in. So you had your pullback off of a key area, and then boom, pull back, and then you had this retest, pull back. So this probably would have been ideally your entry. Right there, somewhere in that area, you risk to here off of the support, and then look at how it came back, retest, and just continue on. And I mean, this was a pretty decent move. Nothing really crazy or anything like that, but it was real simple. Went from the 150s, because I said your entry would have been somewhere around here, so you would have been about 151 entry, 151 and a half, and it went to 157. Nice little $6 move. Definitely something you would have looked at. It hit its range, which was $6.13, which was a nice move. These are the type of plays on the higher end stocks that you're looking for. Now let's circle this back out to the daily. I want to go over GameStop. GameStop ran today. GME. That stock did a nice little move as well. Coming out of consolidation, had a nice little perk into previous week high. We still trading under the 200. Something you have to keep in mind. But let's look at the first 30 minutes. So we had the 30-minute range, and then we had a red candle. So ideally, you would have looked at this and said, okay, let's see what we can do. We started to make higher lows. So what I do is at that point is take a look at the hour, because we already had this pullback on the 30-minute. So I had a 30-minute pullback here, and then I had a red candle. That lets me know I'm going to have a red candle on the 1 hour. So my next move is not going to come into the next hour. So when guys talk about timing, this is what we're talking about. This is how we can say, hey, this is not going to be ready for another X amount of time, because we're looking for the actual push out. So let me turn this to purple, because this is entry day. So that's your area of interest for an explosion. So you take off, break this down to a 5-minute, and ideally, guys, when I show my charts, which is going to be something that I release to those who are part of the group on our website, visit our website, precisetradinganalytics.com, and sign up. I think it's about $85 a month or some sort. But this analysis, I will be able to break down a little bit more extensive as far as order books, different things of that sort. So you can start training your mind into the actual totality of how to trade these stocks and why it's doing what it's doing. But anyway, we looking at here, this was a nice little area here of entry when it came off this break. So as you can see, it kept respecting. So right here, it respected, popped up, came back, popped up, came back, popped up, came back. this is where you would have got your entry in, somewhere around here with a little bit of risk. Now, why is that? Because again, with the further education, we'll start showing you how different things line up, and that's what makes us confident in that particular trade. Now, we go back here, gonna go here, look at that pinpoint, and boom, right there is where you would have got in at. So we had a test and then a retest. You always wanted to come back and retest. So this was your area of entry. It came back, tried to retest, skipped, and then as soon as it got over 27.49, shot to 28.79. So it's one of those things that, again, you got to wait for it to manifest. You got to wait for it to squeeze. You got to wait for it to move the way you want it to move, and look for those particular trades. Until you see that trade, you don't do anything. And in this market, it will punish you if you try to jump in early or do something that doesn't make sense. So GameStop, good entry. I probably would have played it off of the 27.30s and then rode it for a nice little win. The next stock, let's go back out to the daily. The next stock we're going to go over is ACGL. Now, this is one, had a nice gap up. So we had some strong volume from the day before, which was really just a pop move. And then the next day, gapped up, institutional gap up. And then and it held. It was a really nice hold. So let's break that down. And let's really go to the 30-minute first. So we had this pullback, pull, and then right here was your 30-minute range. So we had a pullback here. So this is probably indicated on the 15, and you had a quick rip. So let's go to the 15. And as you can see the pullback here. So once it hit its low, you start to look for the reversal. So we go back to the 5. You see that we had that pullback, and now we're looking for the reversal. So remember, we already know what our area is. It was about here. So let's go back to the 15. So you can see that it lines up. Remember, this is entry day, so we're going to make this purple. So that 55.90, 55.91 was a critical area. So what we're looking for is that push. Let's go back to the 5. As you can see, we marked our area, come back. Now we go back to the 1. So now I'm looking for my point of entry. So I got the bounce, okay? But I gotta wait for it to retest. So it didn't retest to here. So we got our entry or support. So we had the bounce, pull back. Now most people would have jumped in here because it was breaking out here. No, you have to wait for the retest. Once it retests, boom, it retests, breakout. So this was a very strong breakout above 56.13, and then it went to 56.99 and kind of just kept going for the rest of the day. Not a big trade, but it was definitely a small risk to reward for you to actually take advantage of that particular trade. So pretty solid trade. Next trade we're going to go over is AGLE. Okay, AGLE, excuse me, is a biotherapeutic company. Bios, you know how that is. Those stocks tend to move, and they tend to be the stocks that kind of get everybody going. AGLE, the chart was very interesting. So let's go over it. The 30-minute, I told you again about that 30-minute range. So we looked at that 30-minute range, and pullback was somewhere right here. Now that might have been a 15-minute pullback, and it might have been a 5-minute pullback. So let's take a look at it. And it was a 5-minute pullback right there. So you figure if you looking at this and you got a nice little pullback, let's go back up here. You got you a nice little pullback here. Your trade's not gonna really happen till after 10 o'clock. So you shouldn't even be looking at this till after 10 o'clock. So once we go over here, boom, 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 10 o'clock. So we gotta wait for a pullback. So if you look at this, you had a pullback, snap, pullback. Now this would have been your area looking at the smaller time frame. So let's go back to the 15. So with that being your area, stock got really choppy. So go here. So we had 86 cents. So I broke that down. So 5 minute. Remember, this is the area. Pulled back, came back, retest, pulled back. Now I'm starting to see the pattern. So we go back down to the 1 minute and let's look at that price action there. So the price action there, remember we gotta turn this to purple. The price action there is what really set the tone. So we had this retest, pull back, retest, and then a nice little pull up. Now if you draw your line properly, you would have seen the test. So right there, it came back, test, pulled up, missed the test, pulled back. You gotta wait for it to pull back. Once it pulled back, then that's where you get your entry. The entry would have been about right here, somewhere in this area. So let's do this. Somewhere right there on the pullback. So let me go here. So remember, test, missed it, wait for the pullback, you enter here. So if you enter here, you would have had about 2 or 3 cent risk maybe on that pullback. So, I always tell, people when they look at stuff, that right there is 10 cents risk. But you remember, this is a penny stock, so 2 cent risk. And you literally had a 2 cent risk. And then you had this pullback. So you had a 2 cent risk and it went 12 cents. So that was a nice move there. And then you would have still been holding because it never came back to your area. And then it went up to $1.13, which was 31 cents. So 2 cent risk, take some shares off, and then you pretty much at break even. And from there, it broke trend. So what a lot of people do when it broke trend, they keep their position. Remember, when you break trend, you got to draw another line. So you go back out. Let's look at that 30. And remember, our entry was here. It popped up, pulled back. Now that I see 2 consecutive red candles like that, I know that it's coming off of the 1 hour. So as you start to trade more and more, when you're looking at bar, you can look at a time frame and know what time frame you realistically need to be in. So right here, we had an entry at 92 right here. Remember, 30 minute, and then we looking at the play. We had a pullback, and then we had a nice little push. So go here. Let's break this down to the 5. Remember, that was your area. It ended up pulling back to a key area. So we had a swing high, and then it swung. So if you look here, you can see the retest right there. So we test, bounce, came back, test a little bit here, came back, and really test here. So when we test here, that's what started the first move for most people. And then if you look very closely, now let's go down to the 1 minute, you can really see the entry. So we had this pullback, test, you jumped in, got this big ramp, go back to the 5. Now you have to readjust. Sometimes this happens, you have to readjust. But we had us a pullback here that was very critical. Right there. So ultimately on this 5 minute, it played this area as a key entry. So when it came back, see the support, and then it ramped up. So with this key area here, probably would have added some shares here and let it rip. That's one of the key things about trading, is understanding the areas of interest. when you're in a trade. But again, guys, we were down here, so if we had it here, we probably would have been somewhere right here at 83 cents, waiting for this move to 113. And I mean, you could have added again, but would it be in a penny stock? Would it be in something like float? And if you're in there with size, I mean, you literally 82 cent, average between, let's see, 86 cents and 81 cents. So you probably would have been somewhere around 83 cent for an average, 83 cent with 50,000 shares, which is a pretty decent position. You easily, that's 41 grand or something like that you had in there. And then you had you a nice move from 83 to 113, which is, with no risk at this point, because, you already in the position. You had already made money off of it. You already did those things. So when you're in that situation and you got 30, this 30 cent move with 50,000 shares, that's a solid move. It's 15 grand you would have made on that trade, and you're already up. So you feel more confident, you feel more in control because you're already up. So this is a massive move for people who have small accounts. You can put up a lot of shares and only look for one or two significant moves and get the bulk of the trade. So guys, if you have any questions, concerns, leave it in the comment section. Please subscribe. Make sure you like and subscribe to the video. Guys, we're just on the Discord. It's still free as of right now, so you can get that additional information and meet with other traders that can help you grow or just give you good advice when it comes to trading. And as I always tell old traders and new, stay studying and stay focused.